Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Today, we're digging into MercadoLibre's first quarter earnings call for 2025. And what really jumps out right away is just the strong momentum they've carried over, not just in e-commerce, but, fintech too, Mercado Pago.
Absolutely. That sustained revenue growth picking up right where 2024 left off, it's pretty telling. Plus, they're clearly not sitting still. Specifically mentioned the U.S. business efforts.
Yeah, and the brand seems stronger than ever. They said brand preference metrics hit all-time highs. Brazil, Mexico, Argentina, Chile.
Right, which suggests consumers are really connecting with them. It's more than just transactions.
Definitely. And okay, let's talk fintech numbers because wow, user growth is huge. Over 30% year-on-year growth in monthly active users, now up to 64 million.
Yeah, and it looks like that strategy, offering attractive returns on deposits, is really working. It's pulling users in and keeping them engaged.
It seems like a smart way to build loyalty, doesn't it?
Well, yeah, it creates a stickier ecosystem, right? If you offer a good rate, like a really attractive place to keep digital cash, people are more likely to keep funds within Mercado Pago. And then naturally, they're more likely to use other services too.
Makes sense.
And we also saw that credit portfolio growth 75% year on year, big number. But crucially, they said delinquency levels are still comfortable.
Okay, and something that really stood out to me was the Brazil credit card business. Record lows in first payment defaults.
Yeah, that's quite an achievement. They put it down to better scoring models, getting smarter about assessing risk, and also a deliberate shift. They're moving a bit upmarket, targeting more established customer segments.
So it's scale, but also improving quality, finding that sweet spot.
Exactly. It shows they're learning and refining their approach in a complex market like Brazil. Better targeting means lower initial defaults, healthier growth.
Right. Okay, now, Argentina. The performance there was, well, exceptional seems like the right word. U.S. dollar revenues more than doubled year on year, across the board, all business units.
It really looks like the stabilizing macro picture there is letting them leverage their brand strength. The value proposition is hitting home now.
And what's really interesting is that income from operations grew even faster than revenue in Argentina.
Yeah, that points to some serious efficiency gains alongside the top-line growth. You can understand why they sound optimistic about Argentina.
That's like a combination of factors, isn't it? The improving economy, sure, but also their established brand trust, both MercadoLibre and Mercado Pago, and just a strong user experience.
Totally. And the credit side there is booming too. Grew 4x year on year in dollar terms.
Wow, 4 times.
And profitability improved, assets under management up, 69%?
Yeah, significant growth.
Yeah.
And they mentioned more people using credit cards and installments, which is pushing up take rates, the revenue per user.
Makes sense. Plus, they're planning to launch their own credit card in Argentina later this year.
That could be a big deal, right? Deeper integration of commerce and fintech in a market they already dominate.
For sure. The existing popularity of installments suggests the demand is definitely there.
Okay, let's switch gears a bit. E-commerce, their own first-party sales, the 1P stuff. That jumped 102% year over year.
Huge growth. And they're saying it's down to better product selection and being more price competitive.
It feels like technology is a big driver here, too.
Oh, definitely. Things like automatic onboarding for sellers, smarter buying systems, dynamic pricing. It all adds up. Better economics, better growth for 1P.
And guess the fastest growing category, supermarket.
Right. Up 65% year on year and accelerating sequentially.
They put that down to just a better overall value proposition. Selection, easier site navigation, repurchase features, promos, and importantly, more of their own 1P share in grocery.
And here's a key insight. Their own 1P supermarket operations are actually more profitable per unit than the third-party, the 3P marketplace model.
Why is that?
Well, efficient warehouse operations play a big part. And also, they get advertising revenue directly from manufacturers for those 1P goods.
Ah, interesting. And they made the point that online grocery, FMCG penetration, it's still pretty low overall in LATAM.
Exactly. Massive long-term growth runway there.
Plus, they're seeing a halo effect. Grocery buyers tend to buy more general merchandise, too.
Yeah, that cross-sell is valuable. And underpinning all this, of course, is logistics. They keep investing in fulfillment centers as needed.
Can't grow like that without the warehouses and delivery network, right?
Precisely. That infrastructure investment is non-negotiable for the kind of scale they're achieving.
Okay, circling back to fintech. Their big picture goal seems to be democratizing financial services across the region.
Yeah, transforming how people relate to money, offering yielding accounts, credit, investments, insurance,
Right.
the whole suite. It's about a win-win proposition, as they put it.
And the rebranding. Mercado Pago going yellow, like the marketplace.
Smart move, I think. Leverages the massive brand awareness and trust MercadoLibre already has. Creates a unified feel. They launched that in Chile and Mexico in Q1, Brazil just recently in April.
It's not just the color, is it? They mentioned updating the visual identity, making it more uh, aspirational, modern.
Right, and evolving the user experience too, making it feel more like a specialized digital bank aiming to be the #1 digital account in Latin America.
That means simplifying how products are displayed, making navigation easier.
Absolutely. User experience is king if you want to drive that kind of mass adoption for digital finance.
Now, that Brazil deposit strategy, offering 120% of the CDI rate, that's aggressive.
It is. It's clearly a marketing and positioning tool. Build loyalty, get people using Mercado Pago more often. There are conditions and limits, of course.
And they even hired a famous Brazilian singer for a campaign.
Yeah. High-profile endorsements plus a compelling financial offer. It's a classic, often effective playbook to grab attention and new users in a competitive space.
Okay, let's talk credit portfolio health. How are things looking?
Generally pretty good, according to them. Brazil and Mexico portfolios are healthy. No significant deterioration reported.
In Brazil, credit cards are actually improving.
Yes, better asset quality, those record low first payment defaults we mentioned on recent cohorts.
So they're managing risk proactively.
Seems so. They mentioned being more conservative with lower credit score customers in Brazil and Mexico, tightening things up a bit, but apparently with no negative hit to overall NPLs.
Interesting. And Argentina has the lowest delinquency rates.
Yeah, which they think is because private sector debt is generally lower there, plus people use Mercado Pago so frequently for everyday stuff.
How are they funding all this credit growth?
Primarily warehouse facilities in Mexico and Brazil, capital markets in Argentina. They did mention a tactical shift in Brazil, holding some loans on their own balance sheet, basically to optimize funding costs.
And they seem quite bullish on the new Argentina credit card launch later this year.
Yeah, they expect it to be very relevant, though they're being cautious, adapting models for the local market, planning the rollout for the second half.
Okay, what about competition? It's not like they have the market to themselves.
No, definitely not. They did flag the technology vertical in Mexico as seeing a slower start to the year.
Why was that?
More aggressive competition on pricing and financing, apparently. And maybe some gaps in their own selection. They said they're working on it.
But overall, GMV growth in Mexico is still strong.
Yeah, other categories growing around 30% year on year. The big strategic focus there, they said, is becoming the best and largest digital bank, competing head-on with traditional banks and other fintechs. And they're seeing strong growth of those super yielding accounts and their credit cards there, too.
And the broader LATAM landscape. Players shipping from Asia, building local operations.
Right, lots of activity. They said no significant short-term impact from U.S. tariffs, though.
What about the new entrants in Argentina?
Temu.
Amazon, shipping from the U.S.
Competition is heating up there, for sure. But again, they said no significant impact on their performance yet. And interestingly, MercadoLibre is actively expanding its own cross-border offerings into Argentina. Fighting fire with fire, maybe?
And TikTok Shop, launching in Brazil and Mexico.
They're watching that closely. Early days, but, it has the potential to bring new demographics into online shopping. Something to keep an eye on.
Okay, let's wrap up with margins and the outlook. EBIT margin improved year on year.
Yes, largely driven by Argentina's strong performance and higher revenue share, plus better margins there. That helped offset investments in Brazil and Mexico, things like logistics and the credit card ramp-up.
Do they give any margin guidance?
No specifics. The message was very much focused on capturing the long-term growth opportunities, commerce, fintech. They're willing to accept some short-term margin pressure for that bigger prize.
Which makes sense given how low online penetration still is in LATAM, right? Around 15% for transactions. And fintech adoption, especially in places like Mexico, still has a long way to go.
Exactly. Huge runway. Their strategy seems to be balancing growth with, let's say, reasonable profitability. Merely growth fit, I think was the phrase used before.
What about ad revenue? That's becoming a bigger piece of the puzzle.
Growing strongly, around 50% year on year on an FX-neutral basis. Penetration increasing in Brazil, Mexico, Argentina, driven by better ad products, brand ads, display ads, etc.
And they're expanding ad inventory beyond the marketplace now. Mercado Play on TV.
Yeah, new channels for advertising. That's interesting.
Margin contribution by country. Argentina obviously improved significantly.
Right. While Mexico and Brazil saw some compression, partly due to credit card growth, those logistics investments, and some valuation effects.
But they did say credit cards older than 2 years are already profitable.
Yes, which suggests that as the portfolio matures, profitability should improve over time. Those upfront investment costs start to pay off.
Any other points? Cross-border trade?
CBT is still relatively small, they said, but they plan continued enrichment. Shipping from Asia, shipping from the U.S., they mentioned Texas into Latam.
And blue money. Payments on the marketplace using Mercado Pago funds.
Still a big deal. A significant and growing chunk of GMV, maybe 20–30% depending on the country, shows that integration is working.
So summing up, a really strong quarter overall. Argentina was a standout performer. Continued strategic investments in key growth areas like fintech and logistics, and navigating a pretty lively competitive scene.
Yeah, the opportunities in Latin America are clearly huge, given where online commerce and financial services are today, but it's definitely not without its challenges, competition, economic factors, execution risks. It's complex.
It really makes you think, doesn't it? Consider the long-term implications of this convergence, e-commerce and fintech becoming so intertwined in these emerging markets, and how companies like MercadoLibre are really driving that evolution. Thank you so much for tuning in to the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.